Welcome to the final episode of this series, Expert Perspectives Navigating the World of Global Investing, proudly brought to you by Discovery Invest. Today, we have a special guest joining us online from one of our leading partners, BlackRock. BlackRock is the largest asset manager in the world, represented in over 30 countries, and they have more than 16,000 employees globally. We're chatting today to Andrew Kieran, who is the Head of Wealth and Multi-Asset Strategy Solutions at BlackRock. Andrew's role combines all BlackRock's research, investment technology, investment experience, and technology to create whole portfolio approaches for clients. And today, Andrew will be chatting to us about how he goes about creating whole portfolio approaches for clients. Andrew, can we start off with explaining to our viewers, what does it mean? What does a whole portfolio approach mean?
It's a great, important question to hit up front. Really, the whole portfolio is moving away from the idea of being focused on a product or a bunch of products to really thinking about what matters for a client in terms of their objectives, their goals, their ambitions, and importantly also their risks, whether it's their risk preference, how that evolves through time. And then we do this by seeking to understand their needs in the context of that whole portfolio and the different investment decisions that we can make. We can then access a full range of portfolio building blocks and strategies to seek diversified return drivers for their whole portfolio, encompassing not only your global assets, but also your local assets. We build relationships with our clients that go beyond the investment product by sharing tools and insights. We leverage our industry-leading technology platform, Aladdin, to harness diverse perspectives from across the whole of BlackRock.
Great. So you don't just look at a person as a pocket of something. You look at the whole holistic person and you give investment advice and develop strategies that suits the whole person and the entire life. So,
correct. So we're looking at cross-asset class, cross-product, cross-capabilities, really enabling clients to choose between different risk preferences and evolve them with them through time.
Great. And that leads me to the next question I want to ask you, Andrew. And I think this obviously contributes to why you have $10 trillion in assets under management. What is your investment philosophy? And I think it probably connects quite well to what we've discussed previously. But also center in for me on your differentiating factors. How did you accumulate this amount of money?
Well, if I focus on what I do and what my team does, BlackRock's multi-asset team is the investment group at the heart of BlackRock's portfolio construction, asset allocation, and active management ecosystem. The team consists of over 300 investors managing over $1 trillion in multi-asset. This team is uniquely positioned to draw on the full toolkit of BlackRock's index, factor, alpha-seeking, and active manager research investment capabilities to deliver precise investment outcomes with cutting-edge alpha insights. And we've been doing it for over 30 years. We also believe on a forward-looking basis that sustainability will be a powerful driver of global returns in the medium term. And that should be ever more central to investment decision-making. This is why we have fully integrated sustainability insights, data, and best practices into our investment philosophy, process, risk management, and importantly, decision-making for the benefit of our clients. It is this forward-thinking nature, collaboration, a culture of collaboration that really think has helped us grow to over $1 trillion as an investment team.
Andrew, and I think you're probably very much aware of the following question I want to ask you. And it's two key themes with regards to global investing, and you've been having this conversation probably for decades. And that's the one about active versus passive management. Which one? Is it either or, and you get proponents for it, you get strong opposition against it? And BlackRock having a view of both active and passive portfolios probably puts you in a position to give us an objective view here. So can you go into the debate of active versus passive in the context of global investing for a South African?
Absolutely. And having written on the topic from my own postgraduate thesis over a decade ago, I think it's time, and particularly BlackRock believes that it's time for investors to stop thinking about the world in active versus passive terms. It is important for investors that you make every decision with an active mindset, whether you're choosing a stock, a bond, a global stock, a global bond, a local stock, or a local bond. It has to be done with an active mindset. The real question is how to best blend alpha-seeking, broad market or index and factor strategies. And we think investors need to assess what mix of return sources they are buying to properly identify alpha opportunities or return opportunities. Alpha, in our view, is the return an investment manager can deliver beyond traditional sources of return, such as the market return or static factor exposures, such as value or momentum. To better build portfolios, investors should look at alpha opportunities, including those from tactical asset allocation or more dynamic investing that go beyond specific asset classes, delivering a blend of alpha-seeking managers with indexing and factor strategies combined, importantly, as cost-effectively as possible.
So what I'm hearing, it's not either or.
It's a blend.
It's a blend, hence you offer both and insure people. So when you put whole portfolio approaches together, you look at a view of both active and passive and what is right for that portfolio. It's not only passive and only active. Andrew, our second age-old decade debate that we've been having is the role of China. So, I mean, that's much debated. We've been talking about how it's going to overtake the US by some time. But it's also becoming more and more dominant in our world. So I think the investment universe in China is probably becoming more investable and easier for us to access in portfolios. So for a South African investor who's considering to invest offshore, what would be your comments with regards to exposure to China and making sure that's included in your portfolio?
It's one of the big topics. China's economy and capital markets have rapidly grown to become the second largest in the world. Yet investors, particularly foreign investors, only own a minuscule share of Chinese stocks and bonds. We believe there is a missed opportunity for helping to meet investors' long-term goals. Investors will need deliberate diversification across countries, sectors, and companies, in our view. And, to your question, how can you gain exposure to Chinese sphere of growth? Well, it's not just about Chinese assets. It's about investing in companies, sectors, and countries that are leveraged to Chinese growth. Both China and the US are seeking self-sufficiency in the critical industries of the future. We believe investors need to balance the investment case for gaining exposure to both within their objectives and constraints, as well as with possible investment restrictions on each side. Now, after a spectacular 2020, Chinese equities lagged in 2021. For 2022, we maintain our small tactical overweight to Chinese equities, as well as a preference for Chinese government bonds. China bonds delivered improved portfolio resistance with diversification, and China bond yields are higher than yields in major developed countries. Finally, Chinese rates appear more attractive next to US rates in 2022.
So definitely worth considering making sure your portfolios have sufficient exposure to the Chinese market. And your strategies at the moment and the ones you manage for us as well, or advise us on ultimately, does that have sufficient exposure, and does it align to your thoughts in 2022 about exposure to China?
Correct. I mean, we're overweight emerging markets, including China, and we have an allocation to Chinese government bonds within those portfolios. And of course, importantly, we evolve those through time.
Excellent. Which leads us actually into, what are your thoughts on 2022? I mean, they're much debated last year. The discussion about China is so important in the context of 2022. So last year, we've been talking a lot about the restart of the global economy as the race of the vaccine, the global restart of the economy, and we didn't quite get there last year. What are your thoughts on this year? Where are we going in 2022?
Great question. So we expect 2022 to be another year of above trend economic growth and inflation, although both are likely to decelerate significantly from the rapid pace of 2021. The recent COVID wave and the emergence of the Omicron variant are likely to delay, but not derail the recovery, as less growth now will translate into more growth later. The demand-supply imbalances that have led to significant acceleration in inflation should improve materially, and we expect headline and core inflation to fall later this year, even if the fall is probably less than what's currently anticipated by central banks, particularly in the US. We remain overweight in global equities, with our largest overweight now being Japan, followed by small caps in developed markets and emerging markets. Regionally, we stick to the idea that the broadening of the global recovery will be increasingly beneficial to non-US markets. In the developed market credit space, investment-grade credit remains underweight. The asset class offers limited cyclical exposure, and unlike high yield, where we're more neutral, the quality of the investment-grade indices has deteriorated over time. We hold a positive view on all asset classes in the emerging market debt space, however, corporates, sovereigns, and local currency. Valuations appear more attractive than in developed market credit, and the asset class should benefit from developed market central banks' benign neglect of higher inflation and commodity prices, and from the preemptive tightening cycle initiated by several emerging market central banks. We remain underweight in nominal global government bonds, but switched to regional preference. From being neutral US and underweight non-US markets, we have switched to be underweight US and now neutral to non-US markets in portfolios for a global investor. As we talked about, we have an allocation to Chinese government bonds, which offers significant real and nominal rates premium versus both US and European, as well as a turn towards easier central bank policy, despite the less favorable ESG profile of China versus other markets. We have moved US inflation-linked bonds back to neutral from overweight. We see persistent medium-term inflationary pressure and continue to like inflation bonds strategically. Tactically, however, 2022 should see lower growth, lower inflation, and tighter policy, an environment where we see further break-even widening or the improved valuation of inflation-linked versus normal bonds as unlikely. I think important to talk about risks. Key risks we're watching include the uplift in inflation is not temporary, as supply chain issues keep lagging demand, particularly in this sustainable transition to a more sustainable economy, and that central banks get their timing wrong, either tightening too hard, promoting a decline in activity, or too late and inflation expectations get out of hand.
That's great, Andrew, and I think it gives investors a lot to consider. And there's a case for globally investing, but I think South African investors have also become a lot more aware about the importance of having enough exposure to global assets. But the age-old debate is how much is enough? And I know it sounds like a simple question, but it has a complex answer because it depends on so many things. But can you, as an expert in this field, give a South African investor some indication of what percentage should you have exposed of your assets should you have exposed to global markets?
Yeah, look, I think going back to the context of the whole portfolio, it is really important that you are investing overseas in global assets in the context of your local assets and how they are evolving, both your local equities, your local bonds, and your local rates. So we would argue that you should maintain a strategic allocation for diversification to global assets within the limits of regulation at all times. For the main reason being is that you never know when you're really going to need that diversification. Moving from risky assets locally to riskier assets overseas, that relationship will continue to evolve as correlations or movements between different assets evolve. So we would argue for a strategic allocation to overseas, but not just relying on single asset class, not just investing in a broad equity, but thinking in a multi-asset lens, evolving your portfolio through time to really take the best opportunities you can while maintaining that local diversification. So whether it's global equities and global bonds, not only looking at index or active, but really thinking through the asset allocation so that it's complementary to your local exposure, and importantly, stays complementary. As these assets are continuously evolving, you want to make sure that they evolve together and not go off in different ways.
What would be the best way, or what would be the overall guidance you would give an investor in terms of how do you go about globally investing? We've talked quite extensively about key topics, and I'm sure many investors would be wondering right now, I wonder if I know enough to do this on my own. So what would you advise as a professional investor in your personal capacity? Would you tackle this journey on your own?
Look, I think the world is evolving. We've seen with COVID, we've seen with climate change. This is really where we have to work together to help solve the world's problems, investors and clients. Really, a team-based approach is how BlackRock and our BlackRock multi-asset team operate, trying to share different ideas to come up with the best outcome for our clients with the most precision possible. Of course, there is no crystal ball. I've been at BlackRock for a long time and I've yet to find it. But it is forward-looking, not backward-looking. It is recognizing that exposure to markets is evolving. So thinking cross-sector, thinking cross-geography, and not relying on traditional narrow bands. Complementing your long-term view with a short-term reality as the markets evolve. So as you're thinking about investing overseas, you're thinking about your risk profile and how much appetite to risk you have. Again, doing that with advice. And then thinking about, as I'm investing overseas, I'm not just investing closing my eyes. I'm diversifying across geographies, I'm diversifying across asset classes, but also importantly, sectors as well. You're not just relying on the best performing tech names in the industry to deliver returns. You really want to have complementary sources of return, and as many as possible. So it's not just equities going up and down that impact your portfolio, but different types of equities, quality equities, value equities, different types of strategies that again are not just relying on a market return, but are actually delivering true alpha. So really driving idiosyncratic stock selection as opposed to just relying on the markets going up and down.
And if you don't want to do it on your own, speak to a financial advisor. Find the right financial advisor with the right skills and expertise to navigate your offshore journey.
This goes back to the whole portfolio concept. No one person can solve all problems. So you really have to look for help at the whole and then find the best experts to help you with.
Great, excellent. And I think that brings us to the end of this episode. Andrew, that was very insightful, and thank you for your time today. I'm sure our viewers got a lot of insight out of our conversation today. Thanks for joining us. And that brings us to the final episode of this series, Expert Perspectives, Navigating the World of Global Investing, proudly brought to you by Discovery Invest. If you want to learn more about offshore investing, head over to our offshore information hub on www.discovery.co.za for more insights, tips and tools on offshore investing. Thank you for joining us.